Hello everybody, this is Lara at Pure Elliott Wave with your first Bitcoin analysis of the new year for 2022 for the week beginning Monday 3rd of January. I was expecting a little bit of upward movement, an upward bounce to continue a bit higher before downward movement continued. That's not what happened. Prices just moved lower. It essentially does remain range bound. There's now pretty strong support about 44,500. The main Elliott Wave count is expecting a deep pullback to continue lower, and a target is now calculated for that pullback to end at 35,938. When that's complete, then I'll expect the bull market for Bitcoin to resume, and the next target, which is highly provisional, are 223,535, 775,540 or 936,671 for the bull market to end. Elliott Wave analysis first, classic analysis last, and it's time to step back again now that we have data for the last month of the year for December to have a look at monthly charts. This is the beginning data for Bitcoin back in 2010, and from this low to this high, this fits perfectly as a 5-wave impulse. And I'm labelling it cycle wave 1. It's lasted several years. Cycle wave 2 to complete lasted 1 year. So cycle degree waves should last from 1 to several years. So a 7-year 2-month duration for cycle 1 and a 1-year duration for cycle 2 looks about right. Within cycle 1, the impulse is labelled at primary degree 1, 2, 3, 4, 5. There's perfect alternation between a deep zigzag of primary 2 and a shallow triangle of primary 4. Primary 3 is longer than primary 1 and primary 5 is longer than primary 3. I've made a lot of notations on this chart because the only information we have about Bitcoin essentially is its past to try and figure out what it's going to do in its future. So looking at how this impulse behaved is going to give us some clues as to how cycle wave 3 and 4 and 5 may also behave. Within cycle wave 1, primary 3 is 38.87 times the length of primary 1. This is not a Fibonacci ratio. This is just a notation on the chart to remind us the length of primary 3 to 1. It's necessary because this is on a semi-log scale. And so primary 3 looks about the same as primary 1, but it's not. It's a lot longer in terms of price distance travelled. There is no Fibonacci ratio between primary waves 1 and 3. Within the impulse of primary wave 3, which is extended, we see intermediate 1, 2, 3, 4 and 5. Intermediate 3 is 16.42 longer than 46.979 times the length of intermediate wave 1. It's very long in relation to intermediate 1, and this is a valid Fibonacci ratio. So there is a Fibonacci ratio here between 1 and 3. Intermediate wave 5 is 66.16 longer than 4.236 times the length of intermediate 3. Again, a Fibonacci ratio between 3 and 5. So we may see a ratio between cycle waves 1 and 3. And if we do, it's probably going to be very extreme like this ratio here. Primary wave 5 is 15.87 times the length of primary wave 3. There's no Fibonacci ratio between primary waves 3 and 5, and primary 5 is 616.75 times length of primary wave 1. So this is a very, very long fifth wave. I've also noted the depths of these pullbacks. These are actually technically bear markets. Here's the first major bear market. Primary wave 2 was a 94% correction, or a 0.94 length of primary wave 1. That's a huge drop in value. And again here, intermediate 2 is a 0.64 drop of intermediate wave 1. Here, intermediate 4 is a 0.76 drop or correction of intermediate 3, and within primary 4, the first biggest movement, intermediate A, is a 0.91 length of primary wave 3. So at its terminus, primary 4 was relatively shallow, but the deepest part of it, wave A of the triangle, is very deep. There's not perfect proportion between primary waves 2 and 4, and that's okay. Fourth waves, when they subdivide as triangles, do tend to be much longer lasting than second wave zigzags, which are much quicker structures. And so given all of this information, I'm starting to try and calculate some targets for cycle wave 3. If cycle wave 3 reaches 46, 0.979 times the length of cycle wave 1, then a target would be 936671. That is a Fibonacci ratio, and that was this extreme Fibonacci ratio that we saw here for between intermediate 3 and 1. So that's one possibility. If cycle 3 reaches 38.87 times the length of cycle 1, this is not a Fibonacci ratio. This is the relationship between primary waves 3 and 1. If cycle 3 exhibits that same relationship to cycle 1, then a target would be 775540. And here's a more common, well, not common, but a less extreme Fibonacci ratio. If cycle 3 reaches 11.09 times the length of cycle 1, it may end about 223535. That would be almost a minimum expectation. I think this lower target is far too low for Bitcoin. When cycle wave 3 is complete, then cycle 4 may last about a year and it may not move into cycle wave 1 price territory. Cycle 3 may only subdivide as an impulse, and within it, so far, my main Elliott wave count sees primary 1 and 2 complete, primary 2 a 91% correction of primary 1, very deep, and primary 3 extending and incomplete. This has the best look at the monthly chart level. Let's take a look at this at the weekly chart level. We're going to start from this low of cycle 2 down here, this point down here in the end of December 2018. From this low, we may have primary 1 and 2 and now primary 3 extending with intermediate 1 and 2 complete, intermediate 3 extending with minor 1 complete, and minor 2 to move a bit lower as a double zigzag. Minor 2 may not move beyond the start of minor 1 below 28893.621. I am considering this duration of primary 3 to possibly be a Fibonacci 144 weeks. If that's the case, it would end mid-December this year, 2022. And the target for primary 3 is for it to reach 38.87 times the length of primary 1. That's the same relationship between primary waves 1 and 3 within cycle 1. If we see that repeated within cycle 3, then a target would be 417507. Let's take a look at the daily chart now. This high here of minor 1, this point here, so far at this low, minor 2 has met the definition of a bear market. It's over, I think, a 38% reduction in value of market value at this low here. A 20% reduction in market value is the technical definition of a bear market. So minor wave 2 is a bear market. That's okay. That's actually pretty normal. Bitcoin's second waves do tend to be really deep. Here it's ended just a little below the 0.618 Fibonacci ratio of minor 1, and that would be a minimum expectation. I'd expect it to likely be deeper than that. I'm expecting it's likely to continue lower and it's subdividing as a double zigzag. The first zigzag in the double is labelled minute wave W. It subdivides 535. It's labelled minuet ABC. The double is joined by a 3 in the opposite direction labelled X. This could also morph into some kind of combination or possibly a triangle. We could just see a bit more sideways movement before we see a downward breakout. But if minute wave X is over here, it subdivides as a double zigzag, WXY. Within minute X, minuet X subdivides also as a double zigzag. That's okay. There is a rule to apply here. The maximum number of corrective structures in a multiple is 3. That count of 3 applies to W, Y, and if there is one, Z. It does not apply to the X waves, the joining structures within a multiple, obviously, because otherwise the count would be 5. W, X, Y, X, Z. X waves can therefore subdivide as any corrective structure, including a multiple, and the rule is not violated. The Elliott wave count remains valid. But if you ever see a wave count with W, Y and Z labelled within them, W, X, Y, X, Z, that does violate the rule. Such an Elliott wave count is invalid. It's the most commonly broken Elliott wave rule and least understood. This wave count is valid even though we have X subdividing as a double zigzag. That's okay, it's possible. It's just not actually very common, but it does happen sometimes. If X is over here, then Y should continue lower. The purpose of a second zigzag in a multiple is to deepen the correction when the first zigzag doesn't move price deeper. And so to achieve that purpose, minute Y would be expected to end reasonably below the end of minute W so that the whole structure of the double zigzag has a clear downward slope and is in a sideways movement. The target would see this achieved at 35,938. Minute y would reach 0.618, the length of minute wave w. The invalidation point remains the same as on the weekly chart, 28,893.63. When this deep pullback is over, then this Elliott wave count expects a third wave at minor and intermediate and primary and cycle degree, a huge increase in upward momentum. At the weekly chart level, this is an alternate. Instead of primary 1 and 2 being over here, what if it was over here at this last high? This actually has a pretty good fit. Intermediate 1, 2, 3, 4, 5. Primary 1 could be over. We could be looking at an even deeper correction for primary 2. The first expectation would be for primary 2 to at least reach 0.618, the length of primary 1, at 28,249. That would be a reasonably shallow and unusually shallow primary degree second wave for this particular market though. So that's the minimum expectation if this wave count's correct. If the first wave count is invalidated with a new low below this point back here, then this will be the main wave count. At that stage, this will be the minimum expectation, but this will be the expected zone for the downward movement to most likely end within. This normal range is from 80 to 90% the length of primary wave 1, because when we look back at Bitcoin's price histories, its early large degree second wave corrections commonly correct 90 to 80% the length of the first wave. So this is a reasonable expectation for this particular market. This would be extreme for any other market, but for cryptocurrencies this is normal. Primary 2 may not move beyond the start of primary 1 below 3191.3035. I expect this low back here in December 2018 to remain intact. At the daily chart level, we're now considering the structure of primary 2. It's getting slightly problematic. At this stage, from this high to this low, I can't see a completed 5-wave structure, but it does subdivide as a zigzag. So if primary 2 is continuing, then it's not subdividing as a zigzag, it's subdividing as a flat correction. It could also turn out to be a combination, but a flat correction would be more common because that would be the type of structure that would allow further downward movement for primary 2 to at least reach the 0.618 Fibonacci ratio. Looking at the flat correction now, flats subdivide 3, 3, 5, and within them the B wave must reach a 90% length of the A wave. For this, a bounce up to 66,198.1242 would be expected for intermediate B. When intermediate B is a complete structure and has retraced the minimum required 90% length of intermediate A, then a target would be calculated lower for intermediate C. The structure of intermediate B itself looks like it may be unfolding as a flat, A, B, C to subdivide 3, 3, 5. Flat corrections in B wave positions are particularly common, so this part of the wave count now looks reasonable. Within flat corrections, A waves must subdivide as a corrective structure. The only corrective structure an A wave may not subdivide as is a triangle, so it can be a multiple, and here it may have subdivided as a double zigzag, W, X, Y, and now minor B may be moving lower as a single zigzag, A, B, C, to reach the minimum 90% length of minor A at 43,782.5128. So overall, this wave count expects overall sideways movement in a huge increasing range, with B possibly to move beyond the start of A, could even make a new all-time high here, and then C to be a huge downward wave to move well below the end of A. The most common type of flat is an expanded flat, where B does move beyond the start of A and is a 105% length of A or longer, so that's possible. The way to identify B waves and flat corrections, though, is using classic technical analysis. There should be something off or wrong about them. They usually have weak volume and declining range, and they may exhibit divergence with price. So if we get new all-time highs and we don't see weakness, then I would discard that wave count. Okay, let's take a step back with classic analysis as well this week and take a look at the monthly chart for Bitcoin. I can't see a bearish candlestick pattern here on the monthly chart. I'm not going to read these 3 candlesticks as an evening star pattern because the real body of the star is within the real body of the first candlestick. For a proper star, it should be most or all above the real body of the previous candlestick. This one's not. So it's not a dark cloud cover. It hasn't closed well enough into the real body of this candlestick, and this isn't a bearish engulfing candlestick either. So there's no bearish reversal pattern up here. There is, however, short-term but very strong bearish divergence between price and RSI. So that could be resolved by this 1 month of downward movement, or it could need a bit more. If it does, let's look out for really strong support about 28,000. The last completed month of December has a little increase in volume, pushing price lower, so that's bearish, but it doesn't necessarily indicate the end of downward movement. It doesn't necessarily indicate downward movement has to continue, because when you look back at Bitcoin's very important lows, they do come with an increase in volume here, and again here, an increase in volume. So that on its own is bearish, but doesn't necessarily mean price has to continue lower here. On balance, volume is at support, and this support is a little bit reasonable. A break below here would be a bearish signal. Haven't got that this month yet though. ADX still declining, indicating at the monthly chart level again no clear trend, and stochastics neutral. Chart level there is a bearish candlestick pattern at the high, and there's, I think this is quadruple bearish divergence. Yeah, quadruple bearish divergence between price and RSI, with a failure swing from RSI at this high back here. And so it's unsurprising we're getting some downward movement. The question now is, how low is this going to go? When's it going to end? There's pretty strong support about 42,500 here on the weekly chart. The last completed week, this week here, volume is actively pushing price lower. It looks like with the short-term volume profile bearish, we're probably going to get a downward breakout below support. On balance, volume is constrained. This is fairly weak support. A break below here would be a weak bearish signal. We've been over RSI. It's in neutral territory. Plenty of room for price to continue lower before conditions become extreme. And ADX still declining. No clear trend at this time frame. ATR slightly declining as price moves essentially sideways and remains consolidating, and stochastics in neutral territory. And again, I'm putting the correlation coefficient on the weekly chart to show you that Bitcoin and the S&P 500 do not have a statistically significant and reliable positive correlation. In order for that to be the case, the correlation coefficient would have to remain above 0.5 consistently, and very clearly it doesn't. This correlation between these two markets swings from fully positive through to no statistical correlation, right down to negative. And so any correlation they may exhibit at any point in time should be assumed to be more likely due to chance than an actual relationship existing between the two. So if members want to ask me, Lara, you have said that this market is doing XYZ, or I think this market is doing XYZ, doesn't that mean Bitcoin or some other market has to do the same or opposite? My first thing I'm always going to do is check the correlation coefficient between the two sets of data. So it's a handy tool in stock charts which you can also access. At the daily chart level, we've got really strong support now, about 45,500. Below that, again, about 42,000. But this support now, about 45,500, has been tested multiple times. A little bit of a push from volume in the last completed session, but overall volume is declining as price moves a little bit lower, mostly sideways. Resistance about 50,000 and a little bit above, about 52,000. Price is essentially now consolidating. We need to see a breakout before we can have confidence in the next trend direction, although ADX at the daily chart level does indicate a downward trend, which is already extreme, but not nearly as extreme as it can get for this market. RSI is in neutral territory. There's plenty of room to go before this downward trend indicated by ADX becomes extreme, with both ADX and RSI heaps of room below. Stochastics this week neutral, and ATR declining as price is moving slowly lower and really essentially sideways. The moving average situation remains overall bullish, but it's getting closer to neutral. We had a golden cross back here. The 55, I use a Fibonacci 55 rather than 50. The 55-day moving average remains above the long-term 200-day moving average, which has a positive slope, but price is now below all three. That's all from me with your Bitcoin analysis this week. I hope everyone had a fantastic Christmas and a very happy New Year.